welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the D Street. As we start this fresh and new week, remember this is going to be a very eventful week at that. And of course, it's going to be a long one too. First up, we are going to be discussing today the mother of all deals, as it is being called. The EU FTA deal that is likely to get signed today at around 4:30 p.m. And this is bringing the attention to how India's trade, imports, exports will get impacted. Also, how will so many sectors that have been engaged with the EU now get set to see some more fillip that could be seen across the board as well. Remember, as Mr. Piyush Goyal has highlighted, as Europeans are calling it, the mother of all deals. Remember, the European Union is a 27-nation bloc with key member states including Germany, France, Italy, Spain and Netherlands. The EU right now accounts for 17% of India's total exports, while India represents about 9% of the EU bloc's overall shipments as well. And that's why it is important. We have a bilateral goods trade estimated at $136 billion as of FY25 with the EU. The EU still remains one of India's largest trading partners. Now, a free trade agreement with the European Union could definitely lift India's exports, as is being expected and anticipated by a large part of economists, by $3 to $5 billion additionally in the near term as well. Remember, Indian shipments to the European Union stood at $75.9 billion in 2024-2025, and that's likely to get a major fillip this time around as well. India's major exports to the EU include petroleum products, electronics, smartphones, textiles, machinery, organic chemicals, iron and steel, gems and jewellery, pharmaceuticals, even auto parts. In fact, even in services, we export IT sector services, telecom, transport services. Also, this is going to be impacted in a huge way, and that's going to be our focus today, to try and decipher what is it that retail investors can start prepping for when they're looking at rejigging their portfolios with these new trade orders that are going to get set as well. Apart from this, we will also be focusing on the Q3 earnings that are massively underway. We have a slew of private sector banks that came out with the earnings. Brokerage houses are coming out with the reports on that. Axis Bank, Kotak Mahindra Bank, IndusInd Bank as well. All of these earnings have come in. There are brokerage houses reports on that, and you will get to know what is the new pecking order that you need to find out when you approach these private sector banks in your own portfolio as well. Similarly, we will be also focusing on some other earnings like Ultratech, JSW Steel, even Urban Company from the new age tech space that we will be focusing on too. Apart from this, we will also focus on the Adani Group stocks. Most of the Adani Group stocks are up and about in trade today. Why is that happening? That is because the Embraer deal that was announced a few weeks ago, that is finally going to be set in an MOU today at the Aviation Ministry. The event is underway and we will be cutting live to it and showing you what kind of important announcements are being made on that aspect. This also marks the Adani Group's formal entry into aircraft manufacturing, and therefore in case you have been having a lot of Adani Group stocks in your portfolio, what does it truly mean for you? That's something that we will be focusing on as well. So those are the three key aspects that What's Hot will focus on today. But let's kickstart with the EU FTA. One of the key interesting aspects that everybody is watching out for is with respect to what happens to the luxury car segment. Right now, the imported cars in the luxury segment from European Union to India attract about 110% duty. This is likely to get significantly down to about 40%, as some of the reports are saying, and maybe aiming to reach about 10% import duty only on these luxury cars eventually in some years to come. So what kind of cars will get cheaper for you? What does this announcement really mean for the entire auto sector is something that we will focus on now. And my colleague Chetan Bhutani is now joining in, who's been tracking the auto sector very closely and is going to decode for us the large impact of the EU FTA deal on the auto sector. Good morning to you, Chetan. Good to have you with us. I think over the weekend, the long weekend at that, everybody was looking at what kind of cars will get cheaper once this EU FTA deal is signed today. people were talking about all those cars that are from the European Union region, from BMWs to Volkswagen to many other luxury cars, Mercedes as well. So give us an understanding first up, what's likely to happen in the auto sector, and then we will go down to understanding some specific cars that are likely to get impacted benefit.
It's actually, you perfectly pointed out that the current rate of completely built units that are actually imported into India are taxed at about 110% duty. But now with the ratification and the signing of the India-EU FTA, the duty is set to be down by around 40%. And with the period of time span about 7 to 10 years, the duty would be coming down to 10 years, to 10%. But that will take a whole lot of time, Sakshi, because both the parliament of the respective countries have to ratify and formally announce the ratification of the India-EU FTA. Till then, we will see the duties effectively coming down with immediate effect. So, which all car brands are set to get cheaper? I'm going to tell you in that in detail. But of course, cars like Mercedes-Benz are completely building into India, so we will not expect much of the changes to be announced with respect to the middle class and the entry-level cars for Mercedes-Benz. And of course, the cars that are completely built units that are imported by Mercedes will be coming down, but that are not much, because mostly 95% of the cars is assembled by Mercedes in India. So that's not going to really affect much of the brands. But yes, Volkswagen, Renault, and Skoda could possibly benefit. Audi, in fact, would be benefiting. Volvo, the Swedish brand, is also likely to have a big benefit here. So clearly, yes, we would be seeing the car rate to be coming down, but not as much as there's a hype and the buzz being created about it, because it will take some time, because just announcing the particular FTA won't mean that it comes into immediate effect immediately. We'll have to wait and watch the final details and the fine line and the finer tunes of the fine print and the blueprint of the FTA that is being announced.
Absolutely, Chetan. Thanks a lot for giving us all of those details there. Of course, we'll keep an eye out on all those announcements today and eventually get back in discussion with you to find out which segments, which sectors are going to get the benefit, so that consumers are very aware of their purchases right ahead of time. Of course, like Chetan pointed out, remember, it's not going to be that the deal is going to be getting signed today and tomorrow you will get cheaper cars. No, it's not going to happen like that. It will take about a year's time for finally things to get settled, because it's a 27 nation bloc, and each nation will be fine-tuning and finalizing the deal as per them. There could be some changes over the next 6 months to a year, and only then you will finally get to see cheaper cars there on the roads. Thank you so much, Chetan, for being with us. Let's in fact also welcome our guest on board. We have Mr. Abhishek Basu Malik joining in on the program with us to give us an expert comment as to how should we be reading the India-EU FTA as well. Warm welcome to you, Mr. Basu Malik. Good to have you with us. I think this is the biggest talking point, has been for some days, and today finally we are going to be seeing the light, to this 2 decades old conversation that would have started back with the EU in India. Back in 2007, the talks got stalled for almost 10 years. They started in 2022, and finally we are going to be seeing what is being touted as the mother of all deals. What is your own sense as to how should an average Indian look at this massive deal that's underway?
So first of all, good morning to you. It's the actual deal signing is still some months away. It's about probably 6 months. That's the timeline that's been given. So until and unless you really know the contours of the deal, the details of the deal, there's very little to actually discuss. You don't really know anything other than the fact that, of course, EU is a very big, business opportunity, and so is India. But that doesn't mean anything unless you know the specific details, sector by sector, product by product. Just as an example, you were discussing about automobiles, luxury cars, exactly like the expert just mentioned. Until and unless you really know the details of the deal, what is being kept in, more importantly, what is being kept out, because what is being said is that EV battery powered cars are going to be kept out at least for the first 5 years.
Okay.
So these are details that we need to actually understand. So without that, there's hardly any talking point right now, other than the fact that yes, this is a very big step in terms of having a FTA with one of the largest economic blocs in the world.
That's right, but there's one more talking point, Abhishek, that everybody would want to know. This is also coming at a time when we are facing a lot of resistance with our other major trading partner, and that's the US, which has already imposed about a 50% tariff on us, and there is no conversation around, even though there have been, positive statements coming in, but actual on the ground, there has been no progress as far as the India-US trade deal is concerned. So I think the big question that everybody would want to know is that with this massive deal being signed with the EU, is some of the impact of tariffs from the US going to get reduced? Because it's the same kind of sectors that also export to the EU. It's the textile sector, it's the gems and jewellery sector, it's the pharmaceutical sector, it's the IT services sector, where we are hoping that some more visa issues will be resolved, there'll be easier access to that environment. Again, petroleum products, even though not that much, but yeah, all of this basket, which usually exports to the US, is also exporting to the EU. And when we get to stand to benefit from any reduction in the tariffs from the EU, will that somehow offset the impact of the US tariffs?
So two things. One is that you don't know whether the US president is going to tweet tonight saying that India and EU are having a deal, so we will increase tariffs to 500% or 1000% or whatever, right? So we are living in a crazy world, so you can't rule anything out, which, although I'm saying this in jest and probably not going to happen. But yeah, I mean, to an extent, having a deal, having a free trade agreement with the EU is going to be beneficial. But we also have to temper down our expectations, simply because EU as a economic bloc is nowhere compared to the US. US is the largest, our biggest export partner. So it's not very easy that EU is going to replace US completely. So, but I mean, obviously, any small improvement or any large improvement is better than having nothing.
Okay, got that. So let's come to some specific sectors, and I want to understand, for those who are planning their investments for the long term, retail investors at large, how important is it for them to now look at sectors like textiles, some of the names like Gokuldas Exports, Arvind Mills, Kitex Garments, those kind of mid-cap, small-cap names there within the textile group? How should one be looking at gems and jewellery names when these new kind of trade deals are getting signed? Or maybe the IT sector or pharma sector as well. What kind of importance will these sectors hold for an average retail investor's portfolio right now?
Honestly, I don't think it's going to make a huge deal of difference because right now, until and unless you really know the contours of the deal, how much tariffs are getting reduced in foreign industry, it's very difficult to comment. And it's not as if that India is not exporting any one of these things to the EU. It is already doing so. And the differential is going to be dependent on the new tariffs that will come in, or the new, reduced rates that will come in vis-a-vis the competition. So if EU has a trade deal with China, for example, or EU has a trade deal with Vietnam, or whoever is competing with India, it is probably going to negate the effect, that the benefit that we are thinking of. So again, ultimately, you have to see how it rolls out before you can actually comment on who is going to benefit, who is going to not benefit all that much. But broadly, my sense is that there is going to be some benefit to all these exporting sectors.
Okay, just to highlight for all our viewers right now, what exactly is the context when we talk about the textile exports to the EU? Right now, we face around 10 to 14% odd tariffs to up to 16% tariffs in some cases in various textile exports to the EU, which makes us less competitive to other markets like Bangladesh, Vietnam, that enjoy a lot of preferential access under the EU trade agreements already, and they are at a far less tariff or maybe near zero tariff when it comes to textiles exports. Now, European Union imports about $125 billion worth of textiles and apparel annually. from across the world, and India's right now has just about a 5 to 6% share within that. Compare it to China. China exports about 30% of this entire market of textile imports to the EU. 20% share goes to Bangladesh and to Pakistan. And crucially, Bangladesh and Pakistan already benefit from zero tariffs in the EU as well. So they have a better access versus duties of up to 12%, 14% that exist in India. So that's likely to get reduced, and therefore we are going to get probably benefited there. Whatever will be the final print, we will of course get to know eventually. Then when we look at even electronics goods, they were the second largest exports category for us in the EU, valued at $11.3 billion in 2024-2025. So this is again going to be an aspect that we need to watch out for as to how will this be really looked at. When we look at refined petroleum products, India's largest export to the EU went at about $15 billion in FY25. However, most experts still point out that it's unlikely to see a significant gain as FTA, as they already face lower tariffs there, driven by globally the oil supply chains and of course the trade barriers that still exist. So that's likely to get less benefited, but those are the few other categories that you should be knowing about. But yes, the luxury car segment that we were discussing, that is being seen as a major beneficiary. What is being expected is that the duties could reduce from 110% to 40% and then eventually to 10%. That actually makes a case for all these massive luxury car segments, BMWs, Mercedes of the world, to get cheaper eventually. The big question here, Abhishek ji, is that the mass segment in the passenger vehicle space, even if we give huge access to the EU to enter here, is unlikely to get impacted because only cars priced above 17 lakh rupees is likely to get benefited in that manner, and therefore all the domestic car makers which produce cars to cater to the mass segment, they are also largely protected, so not too much of an impact. Or do you really see today the index is down by about 1%? How would you really look into the auto segment and how things will progress here?
Auto segment, if this actually goes through, is probably going to see us, pretty serious disruption. The reason being that, for example, today, let's say the entry level cars for some of these luxury brands is somewhere between 50 to 60 lakh rupees. Now, if that comes down to say 30-35 lakhs, then that would cannibalize the more expensive Indian SUVs that are getting sold primarily. Mahindra is doing a fairly good job in the higher end segment. You have Maruti, you have Kia. Maruti may not be present in that segment all that much, but the other players who are the Korean players, so that segment is going to get impacted definitely, because a lot of people will then they are likely to shift from the top end SUVs to the maybe the beginning models of these luxury cars. Plus,
Okay.
plus you also have to see that there is going to be companies like Renault, Stellantis, who can come in with slightly cheaper versions, which is placed between the Indian and the and these luxury models. So somewhere priced between 20-25 lakhs. So it's going to be a major change in the price points of high-end vehicles that are going to be available.
Okay, so auto sector is likely to see major disruption there, so keep an eye out on that, and perhaps that's the fear that the auto sector is going through, because that index is down by over 1%. Most of the stocks are also feeling the pinch, even if it's going to be just a sentimental impact. Now the impact on the ground will be seen much later, at least 6 months to 1 year later. Let's also talk about the sectors that still are likely to get some special treatment. Say, for instance,
can I say just one thing on
yes,
in
absolutely,
the autos?
please.
See, the long-term impact of this kind of market access is actually tends to be very, very good. Why I say that is because once you have a lot more of, say, a Mercedes or a BMW, etc., on the Indian roads, the possibilities of those companies setting up their own supply chains, own manufacturing base here, which is then going to be used for exports, that rises. So this is not going to be a very short term play, but
Yeah.
maybe 5 years, 7 years later, you can see positive impact of giving market access to some of these larger luxury car players.
Fair enough. So, only in case you are a very short-term investor, you may feel the dent here. But in the long term, eventually, things might turn out to be positive for the entire auto sector. And any suggestion on the defense sector as well? How would you approach that one amidst this new deal?
I think defense will be by far the biggest beneficiary, because that's where, if you see, EU is going to be spending the most, and the natural, ally in terms of producing and supplying to them would be the Indian defense plus Indian manufacturing companies. Also, probably the biggest players would be the European MNCs who have manufacturing facilities in India.
Yeah. Okay, fair point. And especially when we talk about some of the red line sectors like agri and dairy, they still stand to be out of this deal and may require some special treatments there. So how would you look at for the rural market, these sectors, and how should a retail investor be looking at that?
I think agri commodities by far in India is very, very insulated. So most of these FTAs, whether we saw the Australia, New Zealand one, EU, I don't think there's been any changes to that status, and I think it's a political hot potato. So no political party wants to really touch it, because just because of the sheer number of people involved in this entire activity. So I don't see any major changes happening in either.
Okay, fair point. So that's the EU FTA deal. Viewers, of course, we will be keeping an eye out on it throughout the course of the day today. Even when the deal is signed at around 4:30 p.m., we have special coverage that's planned on the channel. So do watch out for that as well, where we will be decoding some of the major announcements that actually come in the evening. And of course, eventually over the next 6 months, 1 year, constantly we will keep looking at how the deal is impacting several sectors and your investments at large. But let's also focus on the domestic cues that we are largely getting from the Q3 numbers. Now, over the long weekend and after the market hours closed back on Friday, I wanted to understand from you, how are you looking at the banking names? We've had Axis Bank, we've had Kotak Mahindra Bank, IndusInd Bank all come out with the earnings. We have brokerage houses raising the targets on Axis Bank, Nomura raising the target price to 1540. Most of the targets on HSBC, in fact, as a 1580 target. So from 1480 to 1580, that's the kind of new targets that we are getting on Axis Bank. On Kotak Mahindra Bank, most likely it's either a neutral rating or a buy rating with a target price of up to 530, with the Q3 profits up by 6%, beating some of the estimates for Jefferies at least. They've also said that the loan and the deposit growth has outpaced the peers and asset quality is stabilizing. That's what they are positive on. For Axis Bank, most of the brokerage houses are saying that they are looking at an outperformance and that rating coming in because the loan and the deposit growth are strong at 15% year on year. We also are seeing that the margins have slipped and the treasury income is weighing on. However, asset quality is stable and the credit costs remain elevated at this point in time. But most of the brokerage houses have actually come out with positive rating on Axis Bank. So Citi has upgraded the stock to buy. Target price that they've raised to 1436. Nomura has a buy rating on Axis, a target price of 1540. Bernstein on Axis Bank has an outperform rating, a target price of 1480. HSBC on Axis Bank has a buy rating and a target price of 1580. So those are the five reports that we have tracked today, 4 reports that we have tracked today on Axis. On Kotak again, Nomura has a neutral rating, a target price of 460. Jefferies has a buy rating, a target price of 530. On both of these, we are seeing positive uptake again on Kotak. On IndusInd Bank also, we have Citi, however, giving a sell rating here and a target price of 800 rupees. What are they highlighting? Slippages are still high. They also believe Credit costs are still elevated. There are one-off gains that have lifted the PAT despite the stress on the books. And ROA seen at 1% by FY27 exit by the time we really exit that as well. So that's something that we need to watch out for. Apart from this, we also have ICICI Prudential AMC, which is on top of brokerage houses radar. Morgan Stanley has initiated the overweight call here with a target price of 3,500 rupees per share. They believe the company is well positioned for industry-leading profit growth, driven by leadership in active equity, mutual funds and alternatives. They also believe the equity excluding ETF share is likely to rise to about 63% there, and that's where they are positive on this one as well. Remember, these earnings on ICICI Prudential AMC also important because first time around the earnings have come in after the companies got listed, and we have more uptick that we are seeing across the board. So those are the top brokerage houses that you're looking at. Axis Bank is right now the top mover on the Nifty post earnings, 5.2% higher. We're also looking at Ultratech Cement and JSW Steel, both after the earnings, up by about 2.5 to 3.5% odd as well. That's also on the move post the earnings. Again, we are also looking at Urban Company that came out with the earnings as well. And here also you do see that the stock is reacting, when we talk about not JSW Cement, we were talking about JSW Steel, by the way. JSW Steel came out with the earnings and Urban Company came out with the earnings, now about 0.7% lower in trade. Yes, JSW Steel is up by 3.8% after the earnings, and so is Ultratech Cement. But Urban Company, on the other hand, is slightly lower in trade. The other segment that you need to watch out for, viewers, is the Adani group today. Like I've had pointed out that Adani and Embraer will be setting up civil aviation assembly line in India. This announcement had come in a few weeks ago. We had already shared that with all of you. Now, MOU is being signed today, marking Adani's entry into aircraft manufacturing. So, Embraer aims to boost the presence in India's fast-growing aviation market with this deal partnership with Adani, and therefore you see the sentimental impact coming in strong across the Adani group, the flagship company. Adani Enterprises up by 4.7%. Remember, India is among the world's fastest growing civil aviation markets, with rising air traffic demand, rapid fleet expansion by airlines, and a steady increase in the number of operational airports as well. And this is now going to be taking a step further when Adani group will be now entering formal aircraft manufacturing. These large aircrafts will be manufactured in India with partnership from Embraer as well. So Embraer manufactures commercial jets with seating capacity of up to 150 all passengers, and the proposed FAL will actually mark Adani Group's entry into this manufacturing, expanding India's footprint into the rapidly growing aviation ecosystem at large. So that's why you're seeing the Adani Group stocks also up and about in focus. All right, viewers, we have so much time only on What's Hot, but do stay tuned on to Business Today Television as we continue to put the spotlight on all the buzzing news across the board throughout the course of the session today. So stay tuned with us, much more coming up on your screens. Of course, I'll be seeing you at 12 noon now with all the daily calls that you have sent to us as your queries on your stock specific portfolio that you have with us. So stay tuned for that. I'll be back for that too.